Welcome back to the Brent Bruce Daily. Today is September 1st, first day of September 2022. It is now 3:43 p.m. Central Time, getting a little bit later in the day, but I want to show you two things that we have learned and some proof on the charts as to the fact that the federal funds rate being increased by the Federal Reserve does not increase home loan interest rates, and also that the mortgage-backed security market does not like the Inflation Reduction Act because it is inflationary. Okay, so we're going to dive in quickly, but I also want to make sure that you like, subscribe, and share to the YouTube channel. We just broke through our 100 subscribers that are watching this show and learning on a daily basis, and we want that to continue to grow. So let's go over here and take a look at the charts. We are down 22 basis points at this point on the day, which continues our bad days. We don't want red, okay? Red is bad, green is good, red. Okay, so first of all, this was where we were at about a 6.0% on a 30-year fixed on the Brent Bruce Daily. This was a bad time for us. What turned us around? What happened on June 15th? The Federal Reserve increased the federal funds rate by 0.75%. So the Federal Reserve increasing the federal funds rate actually brought home loan interest rates down. We had a great run. And if you're watching this for the first time, understand that when this chart goes up, interest rates go down. This is an inverse chart. We had a great run because the Federal Reserve announced that they were increasing the federal funds rate by 0.75% and home loan interest rates went down. Next, over here, July 27th, the Federal Reserve increased the federal funds rate by 0.75%. Again, everyone says, oh no, they increased the mortgage rate. No, they didn't. Look at this shot up here. We went all the way down to 4.625 on our Brent Bruce Daily scenario because the Federal Reserve increased the federal funds rate by 0.75%. Don't let your friends, family, clients, customers, or anyone else that you know believe that the Federal Reserve is going to increase home loan interest rates. I've heard that over and over and over ever since the news came out about Jerome Powell's announcements and comments from the Jackson Hole meetings last week. Okay, so people are paying attention. They're just not getting the right information. And that's where you can come in. That's point one. Point two, the mortgage-backed security market and the bond market and basically the investment community do not like the Inflation Reduction Act because it is inflationary, tremendously inflationary. Let's take a look over here and show some trend lines. All right. So this is where we were enjoying our great day. And then we came down, and this green right here was the last day before the Inflation Reduction Act. So let's make a trend line. And we were looking something like that, right? But then the Inflation Reduction Act was announced. And it went like this, which is not good, all right? This is showing a shift in the mortgage-backed security market and how they felt about inflation because of the Inflation Reduction Act. Just wanted to make those 2 points. All right, so let's take a look and see. Again, we are down 22 basis points on our slide down that we've been on. Home loan interest rates yesterday, I believe we were at 5.625, if I remember correctly. I don't know how I've already forgotten. But let's take a look at the scenario here, the Brent Bruce Daily scenario, and see where we are with a 22 basis points, 2 basis point loss on the day. Okay, so we are at 5.875. Wow, that's not good. Why would we be at 5.875 when we're here? Where 6% was all the way down here. That's a big difference, right? Well, let's take a closer look. We know better than that, right? So let's open this up. First of all, we're really at 5.75 because look, it's only going to cost $7. So we have to open this up. We don't just spit out whatever rate comes out to us like many automated systems do. We look a little further into here and we go, oh, 5.75 is only costing $7. Now you're only an eighth of a difference from that 5.625. However, and let's look at our 4.999. Whoa, 2.26. Man, remember we were talking about 1.6? That was just earlier this week, I believe. There's been a big move. Why has there been this aggressive of moves when we're only down 22 basis points? And this is why. We talked about this on another report that came out a while ago. Because the banks are unsure what's going to happen when it comes to this jobs report that's coming out tomorrow. And that jobs report is pivotal on what the mortgage-backed security world is going to do. They're really keeping an eye on it. And they're hedging their bets. They're saying, look, If we get a report that we don't like and the mortgage-backed security market doesn't like, we already know that they are going to tumble all the way down to this number here, right? Maybe they're even thinking that it's going to tumble to this number here. And where were we at this number? We were at 6.0. So for them to say we're going to be at 5.875, 5.75, they're just getting in front of the losses. So they're expecting, or I guess preparing for losses and a bad day tomorrow in the mortgage-backed security world. Now, if it turns the other way around and they have a great day and things start going up and home loan interest rates start going down, they're cool with that, because then they'll go in and they'll make intraday adjustments, and they will actually make more money by hedging on the side of caution instead of allowing themselves to wait on the side of hope. So they're just getting in front of an uncertain day. And this is something that you can look at and go, wow, what does Brent think? I see these numbers and I go, the banks don't know. They don't know. So the people who are making this pricing here, and this is United Wholesale, which is by far one of the best in the business. Here's another bank here, right behind them, 5.875, 11 mortgage. They're charging, now look, to get to 5.75, they're charging $1,200. So they really are 5.875. All right. The people who are projecting tomorrow's numbers don't know. They don't really know what's going to happen. And that is why they're erring on the side of caution and increasing their interest rates the day before such a pivotal announcement. I hope you can see what I'm talking about and how real it is. And that's why I pay so much attention, because we can start to figure out what's going on. So tomorrow, I will make sure to get with you earlier in the day to let you know what happened on our jobs number and which direction the mortgage-backed security world is moving. And hopefully, if we have a good day, we get a report that shows it's kind of one of those things that's backwards, a bad jobs report, home loan interest rates might really rally on that number, and we'll see a dramatic move because the bank's going to give us back this amount they're taking today, extra, right? They're taking extra today. So they're going to give us that back, as well as the market improvements. Think about that, and we will see how it plays out tomorrow. Let me know if you have any questions. Please do like, subscribe, share, and comment. Let me know what you think, and I will talk to you again tomorrow.